Hello traders, welcome to Investoo.com's flash course on how to correctly calculate targets. In this lesson, we are going to learn when to take partial profits on your trades. And this is rather important because you need to understand that uh, you are not going to be hitting home runs every day. I mean, you're hardly ever going to hit a home run. Trading and growing an account, it's all about taking partial profits, taking small wins over and over and over. Now, we're going to go right ahead and look at this um, crude oil long trade that we have going on right now. And as you can see, we are up about 28 ticks for the time being. And we have a risk open and we have a better than a 1 to 2 risk to reward scenario. Now, well, if you calculate it correctly, about 50 or 55% of the time, you are not going to hit your targets. This is why taking partial profit is very important when it comes to trading. Because if you don't take partial profit, then what could happen right now is that um, crude oil could drop 28 ticks and erase all of our gains right now. So where are we going to take partial profits? Well, that's easy. We are going to use market structure, okay? And as you can see right here, we have a heavily tested area as resistance in the past. We have tested it here. Well, I mean, I already, let me just go test by test on this resistance zone. We have tested it here. We had a fake out, a very important fake out here. You can see that there were a lot of buyers trying to break in, but sellers just pushed price down very hard. Then when we broke to the upside was the opposite. Sellers tried to break below, but buyers kept well buying price up. Then we tested it again after the breakout, and right here when we took our long position, this is where we should take partial profit. And we did. We took partial profit on this long position on crude right at the 43.40 level. And the reason we took partial profit is because price can easily go in our direction. Right here, let me just thicken this horizontal line. I'm sorry, this trend line, so you can better see what I'm talking about. Price can easily go in our direction, then just continue with the move down. Remember, we don't know what's going to happen. We really don't know what's going to happen. So what price might do is just move in our direction, hit the 49.43 area, and then retest the lows of the range. Since we are trading inside of a range where we have broken to the upside, but it is very rangy still. This is the 50-minute um, chart, but what needs to happen is that one, you need to understand that you have to have at least a 1 to 1 risk to reward ratio from your entry to your first partial profit taking. When this happens, you move your stops to break even and then you let the rest of the trade ride. Okay? Because you don't know if price is really going to come down to this previous area or this previous structure and then break with it, okay? Or if price is actually going to just come back down and stop you out at break even. You have no idea what's going to happen, so you have to protect your trade, you have to manage your trade, and most importantly, you have to protect your profits.